Let's talk about reverse mortgages.
Equity out of the property without the obligation of monthly payment.
I'm going to lose all my equity.
No, you don't. That's another fact about reverse mortgages.
Is a reverse mortgage right for all of them?
Personally, I would say yes, but it depends.
Hello, folks. Welcome again to the Mortgage Den. I'm Nick De Silva, principal broker here at Northwood Mortgage, and today we have Leo Saleh, a top mortgage agent here at Northwood Mortgage, to speak to our topic. Welcome, Leo.
Thank you.
Leo, today we're going to talk about reverse mortgages. We've been having different conversations about that. Our population is aging. They're living longer. Healthcare is much more improved than it was years ago. And people are sitting on a ton of real estate. But as you know, we can't take a brick out of the house and go to the bank with it. We can't sell off, a piece of the house and keep the rest of it. But it's a valuable asset which people can utilize.
Yeah.
Let's talk about reverse mortgages. What is a reverse mortgage?
Reverse mortgage is basically an equity takeout without the monthly payment. So instead of taking a regular mortgage or a line of credit when you have a monthly payment obligation, a reverse mortgage is open for Canadians 55 years and older, and you take equity out of the property without the obligation of monthly payment.
Should there be a concern about that if they don't have to make monthly payments? Is there other payments that they still have to make even if there's no mortgage payment?
So the interest is added to the principal and it's taken at the end of the term. So reverse mortgages, they're unique. They work in a different way than regular mortgages. So the way they work, you take a reverse mortgage and then you have the payment added, like the interest added to the principal. The clients can pay it out when they sell the property. So if they are needing equity out for 3, 4, 5 years and then they are about to sell the property and move to a smaller one, then they can pay off the loan then. Or in other situations when the clients pass away, they can live in the house till the time comes.
What about if they move into a retirement home?
You can sell the property, pay out the mortgage, and whatever equity left, you still have it.
Can you put a reverse mortgage on a rental property?
I don't think so, no.
Right.
Most lenders don't allow that.
All right. The lenders with respect to these reverse mortgages are conservative. They have their actuarials. They know how long we're going to live. They give you a mortgage for a small percentage of the value of the house. Should I be concerned that the equity is going to run out?
There is a possibility. It's not really it usually doesn't happen because they usually do the math based on your age, how much equity they give you, and the appreciation of the property year after year. So you should never run out of equity. However, in certain situations when the market drops drastically, you might be in negative equity, but that does not mean you're going to lose the house or they take over the house. In Canada, consumers are protected. There is no such a thing as negative equity. And if your time comes as a client and the clients come to the age when they have to sell or pass away and their kids take over the property. Let's say the property, to give it an example here, let's say the property worth $1 million and the top of the market at 2022, the clients took the max 55%, which around $550, and now it's 4 years in and the property around the value now is maybe $750. But the mortgage now maybe, just to make it simple, let's say the mortgage now is $800, but the property value is $750. If the client decides to move or sell or they pass away and their kids take over, the bank have access to only the value of the property. Any negative equity is they take the loss.
So any balance owing over and above the sale price of a home, that entity, the reverse mortgage lender eats that.
Correct.
Right? They have already accounted for this. They're not expecting it, but if it ever gets to that point, they eat it.
Exactly. They're taking the risk. It's not on the client.
And you've brought up the comment about, their kids taking it over. So I assume what you're talking about is their kids handling their estate if they've passed away. There's a mortgage, reverse mortgage on the property, and the property has to be sold. If there's a shortfall, again, the lending institution who offered a reverse mortgage eats that.
Correct.
A lot of people are nervous about reverse mortgages. Unfortunately, they go out and get lines of credits, they go to private lenders, they go to all these different places rather than looking at reverse mortgages. Let's talk some myths. I get a reverse mortgage. Do I lose my home? Does the home get transferred into anyone else's name?
No, it's still your home is under your name. It's just a regular mortgage register on the property. Just like you take a private or line of credit or regular mortgage, just a lien on the property.
We talked about this. Your kids will be stuck with the debt.
No. No, I actually just had a client who just inherited the property from his mom who passed away, and there was a a reverse mortgage on the property. We got the client a regular mortgage, paid out the reverse mortgage, and he took over the property. So it's not really as bad as they make it sound. And I understand that the myths, because most of them come from the United States. The US has completely different rules for reverse mortgages than here. And the way they handle things there are completely different from here. So a lot of the negative comes from there. People watch it on TV, something they've seen in the US and they think applies here, and it doesn't.
I take out a reverse mortgage, I'm going to lose all my equity.
No, you don't. They give you access, the max is 55%. And to get to that 55%, you be quite in the 80s and maybe even in the 90s to get access to that much equity. And the math or the schedule they do based on your age and the amount they allow you to access it is according to that. So the appreciation of the property should keep enough equity consistently year after year.
So if I sell my property and I have to pay off the mortgage, any equity left over comes to me.
Comes to you, yes. Got nothing to do with it. The lenders just take back their money and interest that over that few years that you own the property and you didn't pay.
All right. They're only for people in financial trouble. Are reverse mortgages strictly for people in financial trouble?
No. Actually, they get the reverse mortgage and actually invest it. They're not in financial trouble. They have money invested, but they see an opportunity in a business or in the stock market or whatever the opportunity is, and they access the equity in the house and invest it with something higher return than what they get, what they pay on the reverse mortgage. Especially it's tax free.
So there's a good point here. So they're accessing the equity in the home. Like I said before when we started, you can't sell off a part of your house. You can't take a piece of brick or mortar out of your house to go to the bank and cash it in for cash. So what they have is a financial interest, which is equity in their home.
Correct.
You've done a number of these. What are people using them for? I mean, you talked about investing, but what other reasons do people take out reverse mortgages for?
Different reasons. Investing. Some people take them to help their living relatives. Some people take them to help their kids with down payment. I've seen that situation before. Gifting it. Like they have the house worth, let's say $1 million. They got a mortgage for equity out 400, 500. They want to enjoy it and give the gift while they are living, so they see the happiness on their relatives' eyes. They give some to the grandkids for educations. They travel. They have money to do whatever they want without leaving the house.
And for those who are in financial trouble but own their own homes, how does taking money out help them?
Help them pay out of that debt and have a monthly income. Because there's 3 ways to take the reverse mortgage. You can take it as a lump sum all at once, or you can take it on a monthly payment, or you can take a bit of a lump sum and the rest as a monthly payment. You can set it up as $1,500, $2,000, whatever the situation is and the equity you have, and that help you with your trouble. So if some people living only on CPP and it's not enough to pay the bills and do everything they need to do around the house or living in general, having the monthly income from their reverse mortgage solve all their financial problems so they never get in debt again.
Like I said, you've dealt with a number of clients who've taken reverse mortgages. Let's talk of some examples of some of your clients and why they did why they took out a reverse mortgage.
I have quite a few examples of those, but one I remember because recently one of the clients, it was a couple. They got the reverse mortgage. They were in financial trouble, bills, and the income wasn't enough. We got all the bills paid out, and they had enough money to have everything taken care of, and they were very happy. And that lasted for about 2 years. And last year, the wife unfortunately passed away. And that's another fact about reverse mortgages. If 2 of them take it and 1 passes away, that doesn't mean it's canceled or recalled or anything. The mortgage, as long as one of the borrowers still living in the house, the mortgage continues, and that client's still living there, and he's still maintaining the house, and his life is still easy and no problems because of the reverse mortgage. He's still having the monthly income. There's others. Another one I had when she got the money to help her granddaughter buy a house. There's others who wanted to actually live, like they were healthy. They were in their 70s. They were healthy and they love to travel, but they didn't have the financial means. And their kids are doing well. She doesn't have to worry about leaving the house to her kids or nothing. She said, you know what? I want to enjoy my life while I'm living. When I pass, I can't do anything with this house. So I want to take that equity and live my life. And she did, and she travels, and she's enjoying her life till now.
You know, we've talked to the different lenders in the industry. How long does an average reverse mortgage last?
Is usually 7 years, I believe. That's the average number, but depends on the client. Some they've been in it for 15, 20 years. Some 7, 8, 9 years, but the average, I believe, is 7.
So it sounds like people are using a reverse mortgage to help their finances, certainly later on in life, and help them stay in a home as long as they possibly can before unfortunately, they have to make that move, whether it be to an independent living facility, assisted living, or a nursing home, or a long-term care facility.
Correct. How would I describe it? It's like having your cake and eating it too. Because you love your house, you don't want to move out of it. You enjoy living in the house. You're healthy enough. You don't need to go to a retirement home. But the bills and everything else are more expensive. So you're still living in the house, but also getting all the equity out of it, and you can spend it and enjoy it. And then after you pass, they'll take care of the banquet. At that point, as a client, as you personally, it doesn't really matter to you anymore.
Downsides to all of this. I mean, I take a reverse mortgage. As you said, the market has sort of come off. Values have come down. I've taken a reverse mortgage. I was hoping to have equity in my home. So if I sold, I could, pay for independent living or assisted living in a retirement home. Where do you see the negative in something like this?
The negative with the equity going down is the risk you would take that the value comes down. That doesn't happen often. But and when that happens, it affects everybody, regardless if you're a regular mortgage or reverse mortgage. When the prices come down, you lose equity, regardless of what kind of mortgage you have. So if you're not moving to the assistant or retirement home for at least 2, 3, 4 years down the road, a reverse mortgage is a good solution. Because if you sell now and you're not moving, where are you going to live in the next 3, 4 years? That's
right.
Another thing. And you might spend more equity on the rent than staying in your property and paying that interest.
Yeah, so it sounds like, if I take a reverse mortgage, and unfortunately we're in this market right now, which we don't normally see in Ontario, much less Canada, is that I may have to stay in my home a little bit longer and, for lack of a better word, suck it up until the values sort of rebound, whenever that's going to be. So that puts me in a little bit of a guessing game, and that's one of the sort of pitfalls in taking a reverse mortgage.
It is, but it's also a pitfall for other mortgages that happen at the same time. If you bought in 2022 with a regular mortgage with 5-10% down payment, you are underwater right now, and your only option is to, as you said, suck it up and wait. So it's similar. So I wouldn't really put it only in reverse mortgage, but yes, reverse mortgage will have that reputation more than the others.
Is a reverse mortgage right for everyone who can qualify? So let's call them seniors. Is a reverse mortgage right for all of them?
Personally, I would say yes, but it depends. So if you are really financially doing well and you don't need the equity out, and maybe the house, you want to leave it for your kids in the future or grandkids, and you don't want to touch it, maybe you think that's not good for you. And I understand that. But in general, I think everybody should take advantage of it. Why not? If you are sitting in a house worth $1 million, $2 million, and you're living in it alone or with your partner if you're both still alive, and the house is debt-free, why are you sitting on that property? What are you doing? Why not take access to that equity, enjoy it while you're still living, and still enjoy living in the house? You're not losing it.
Let's take it one step further. Without getting very specific, how a reverse mortgage is priced compared to your regular everyday mortgage, compared to a secured line of credit using their homes. What would you say about how a reverse mortgage is priced?
They are priced a bit higher. They are not as a regular mortgage. They may be about the home equity line of credit, maybe a little bit more expensive. But again, because you're not paying a monthly payment, it gives you that freedom. It removes that stress away. Imagine you have a line of credit for $200,000, which actually I have a client right now want to do a reverse to get rid of their line of credit because the monthly payment is just putting pressure. that they don't need. So they said, we're going to do a reverse and we don't have to worry about this monthly payment anymore.
Right.
So it takes you out of that financial pressure that every month with a limited income and you have to make that interest payment, and that mortgage is not going away. So might as well do a reverse and put you in a better cash flow month to month, and you live a more comfortable life.
So what you're saying basically is you're paying a premium to have that privilege. A premium so you don't have to make a mortgage payment, a premium so you don't have to qualify per se financially for this mortgage. And it gives you, as you said, the freedom to spend the money on everything and anything that you'd like to do, but unfortunately may not have the cash flow or the assets to be able to pay for it.
Correct. It's the premium rate, but if you compare it to some people who, for some reason, afraid of using reverse and go for private, you're still paying less than private.
Yes, that's a very good point. Well, Leo, thank you again for coming in. That's a lot of good, vital information for anyone who is listening to our show. Reverse mortgages and Leo Saleh. Thank you very much.
You're welcome. Thank you for having me.